Well, let's get David Roche, who is Global Strategist at Independent Strategy, who is with us from Hong Kong for this hour as well. David, what do you think is going on? Do you think Chinese authorities will allow the yuan to appreciate?
No, they won't over the next year or so. In fact, they stopped letting it appreciate and really re-pegged it to the US dollar about a year ago when the financial crisis became bad. And the reason they won't let it appreciate is because despite the good growth figures coming out of China, this is all related to stimulus in the domestic economy. The export sector is really a story of swathes of empty factories with no place to export to. So China doesn't want to lose those factories. It wants to employ them to boost growth, particularly when the stimulus and credit boom which they've engendered runs out of steam as an economic driver. So there's absolutely no way in which they're going to allow the yuan to appreciate over the next year or so. Longer term they've got to, but it's not a short-term story.
David, I just want to broaden the focus on the currency debate here, because one of the repercussions of the weakening US dollar is that we have seen some pretty significant currency appreciation in this part of the world on the Japanese yen, with the Korean Yuan, Aussie dollar, the Kiwi dollar. Is that currency appreciation in danger of choking off any export-led recovery?
Well, it obviously doesn't help, but you've got to remember that these currencies are appreciating against the US dollar. And it's the US dollar which is depreciating. Against the other currencies of the world, for instance, the renminbi is actually depreciating rapidly. So you actually haven't lost, from the Chinese point of view, that much competitiveness for your exports. But the major point, I think, is that when you consider currencies and what is happening in Asia, the most likely thing is that most of the Asian growth is interregional growth. So what you really have to worry about is the strength of the Japanese yen against the renminbi, against the Korean won, even though it's appreciated too, in choking off interregional exports and imports. I actually think that Europe and the US, because of the weakness in the economic recovery they will see, and therefore the weakness in the imports they will suck in, are probably of less importance than the interregional impacts of what's happening in the currency markets out here.
David, I just want to come back to your longer-term point that we might see down the track some movement in the Chinese currency. How important is this for China to make a move, given that it does want its currency to be a global reserve currency? Does it have some need to move to prove that it does justify that position?
Well, look, it's very much like everything else in China. It's a bit-by-bit reform, which has a historic speed limit put on it, in that it is quite clear that if China was to move to, let's say, a fully convertible capital account today, it risks having the sort of volatility which its still very primitive financial sector could not actually withstand. So they want to get out there and have a free and open capital account, because that's part and parcel of making your own citizens richer. That's always the way it goes. But the problem is they can't do it too fast, because if they did, they would be subject to volatility which could damage their real economy. And I think if you go down the road, the likelihood is that the renminbi will be a major reserve currency, because the world is looking for one to replace the dollar. Now, the renminbi won't replace the dollar. It's much more likely that a bunch of different currencies will replace the dollar, and gold will be one of those currencies. But the renminbi is definitely going to be a reserve currency, and that helps China, because if it does its international trade in renminbi, it can then store its reserve currency in renminbi and not have to take a risk on its investments in a declining US dollar and US assets.
It certainly does make sense. Thank you for sharing that with us. We will come back to you in just a moment. David Roche, who is Global Strategist at Independent Strategy, and also thank you to our very own Jegarajah at the APEC Summit.